Hi guys, welcome to today's video for trade of the day. And for today's trade of the day, I would like to look at pound yen. Right, there's a very interesting configuration in the pound yen. We see that a lot of people have been misled to believe that the pound yen is actually a very bearish pair. However, the price action overnight actually showed us that the trend could be reversing. So let me break this down for you. Now, we see that on the daily chart, the pound yen price actually made a strong push down before a near V-shaped recovery up, right? And what I want to point out is really this special red candle over here. Now, whenever there's a strong trend, whenever there's a strong downwards trend or strong upwards trend, right? If there's one candle in the middle that is a different color from the rest of the candles around it, that is what I call a supply and demand candle. Basically, that candle signifies that there is indecision in the markets at that time. Okay, the indecision is big enough to go against the trend and to create a sort of an anomaly in the middle of the trend. So this red candle here is one example. Price moves strongly down here. This green candle here is another example. Okay, and we have three red candles here downwards, followed by two red candles after that. In the middle, we have a strong supply and demand candle as well. So if I were to draw boxes around these three candles, right? Around these three candles, okay, let me just extend it a bit. Okay, I'll change the background to a bit more opaque. Okay, something like that. Okay, now if I were to extend it, you see that price is actually holding in this nice area as well, right? Now, if I were to draw the same candle, draw the same box around this area. Okay, and then let me extend this as well. Now, it's very interesting to note that price sort of held within these two zones very strongly, right? Even when it reversed and came back, it was still holding within this zone, right? And lastly, the last supply and demand candle, the most recent one, okay, we see that price actually tapped into this supply and demand area and immediately reversed. Okay, so this is a very interesting concept. All right, supply and demand trading. It is a strategy that a lot of traders use as well. Okay, so let me just extend this a bit. Right. So we take the most recent supply and demand candle. Okay, there's a strong level over here. Likewise, we can confirm this with Fibonacci by seeing that there's a push down and up and another push down as well. Okay, so let's use an extension. 0.1 to 0.2 to 0.3. And we see that price actually tapped 1.618 right on the spot. Okay, before reversing. So we have supply and demand and we have a Fibonacci level. Okay, this is a strong level as well. All right, so now that we have our daily support, okay, now that we have our daily support, let me just change this to daily support. Okay, let's look for daily resistance. Of course, graphically speaking, we can take this top here where price tested multiple times. All right. Okay, so price tested here multiple times. What I'm trying to say is that on the daily, price could make a push up to the daily resistance. But let's go down to the smaller time frames to confirm that. Now, on the 4-hour, we just want to focus on the more recent price range over here, right? We see that price makes a low, a high, okay? And then it makes a lower high, all right? It makes a low and then it makes a lower low. Now, when we see lower highs and lower lows, price should be in a downtrend. However, if we were to connect this point and this point, we will see something different. Okay, so I'll take right from the top all the way down, tap all these candles in the middle. Okay, we see that currently price, let me change this to blue. We see that currently price is right now breaking above this trend line. Now, what this means is that if price breaks, now that price is broken above, if it closes above the trend line, right, and there is a higher chance for price to continue its bullish move upwards. Okay, so this trend line is a very important trend line. We are actually going to have to stalk this trend line to see if price really closes above this trend line. When price closes above this trend line, okay, we will look for a nice entry level somewhere over here, all right, and then we can play long. But for now, let's just find out where are the good levels to go for. Okay, so what we are looking for is the 4-hour resistance, and graphically speaking, we have one level over here. This can be our first take profit. Okay, so 4-hour resistance is definitely a nice level, because if we see this sort of a zigzag that price has made, okay, we want to see how far price can go up. Okay, so we take extension from the swing low to this high and all the way back down to the low, and then we open all Fibonacci ratios. Okay, and we see that this zone here, where the 4-hour graphical resistance lies, okay, is in between the 1272 and the 1618. Now, another way to use Fibonacci to confirm is that we have a high here and we have a low. We can actually take a retracement of this swing high to low. It's not going to be the best because of this weird zigzag movement, but on a higher time frame, on the daily, it seems like one straight push down, right? So let's take a retracement. From the high to the low. Okay, again, we see that this 4-hour resistance is actually quite close to the 61.8 resistance level. Okay, so this is definitely a zone. Okay, but like I said, this is not a very good retracement, so we shall not take it for now, and I will just use 1618 because it involves a key Fibonacci level, and then I will draw a zone here. Okay, so this will be our first take profit zone. Now we have the daily support, we have the daily resistance, we have our 4-hour resistance. Let's look for our support. And for that, we go down to the 1 hour. Right? I'm saying we have to watch this line really, really carefully, this trend line here. Okay? Because it really determines what we are going to do next. Okay, let me just bring all this. Okay, so let's tidy this up. Okay, on the 1 hour, the break seems even clearer now. Now, there is a strong push up here, right? So we can take a retracement from the swing low to where price currently is and look for good levels to enter at. So let's take a retracement from the low to the high. And we see that the 38.2, right, 38 or even the 23 is at a good level to enter, correct? If there's a close above the trend line, I will use an entry at 23.6, wait for price to push back down towards the trend line. So it's a breakout pullback, and then I'll go long towards this 4-hour resistance as the take profit. All right, and we see that the 4-hour resistance zone, the negative 61.8 target retracement, also falls in line with the 1618. Okay, so let me just highlight the level. Okay, I will put 23.6% and the 38. I want the 38. Okay, I'll use the 50 instead. 50 seems like there's a better movement. So how this is going to work is I will have an entry somewhere here. Okay, a buy entry. All right. But I just because there's a buy entry doesn't mean that I wait for a buy entry over it. I immediately put a buy entry now. It's really a lot of waiting and a lot of watching. Okay. So what I'm gonna do is I will actually wait for price. Firstly, I'll wait for price to close above the trend line. After price has closed above the trend line, then I put a buy entry, wait for pullback towards the trend line. My buy entry will be triggered. Then I will go long towards my take profit zone in the 4-hour resistance. My stop loss will be at a 50% because there's a strong candle rejection here. Okay. Now, if price breaks below my stop loss, this means that it has broken back below the trend line and it's well clear below the trend line. This means that my bullish idea is invalidated. I will immediately take a short and just play down to the recent swing low. Okay, so both ways we are covered. All right, so clearly for now, let's watch this candle and see how it closes above the trend line. Then we can go long. Okay, the 4-hour resistance will be the take profit. All right, so thanks for tuning in. This is the trade of the day, and I'll catch you guys tomorrow.